the top 5 dividend paying companies that you need to buy this year. Let's just jump into the first one that's on the list, which is going to be Nike. Now, Nike, famous for their footwear, of course. That's how Phil Knight started out the company, by selling shoes. But Nike is known for more than just their shoes. They also sell fitness clothes. And when it comes to endorsements, Nike has partnered with the best athletes in sports. Athletes such as LeBron James, Michael Jordan, Rafael Nadal, Tiger Woods, and the list goes on. Whenever any of these athletes wear Nike clothing, it brings their fans to Nike, of course. It brings visibility to Nike. The three main brands that Nike owns are going to be Nike, Jordan, and Converse. From a dividend perspective, Nike has paid a continuous dividend since 1997. That's more than 20 years. They grow their dividend on average, if you look at the 5 to 10 year average, by 11%. And their payout ratio is at 35%. The payout ratio, if you think about it, you take the net income that a company generates, a portion of that net income is paid out as a dividend to the shareholder. For Nike, it's 35%. I like it at 35% because a company that has a higher payout ratio, let's say it's 90%, if a company has a bad year when it comes to net profit or net loss, they might not be able to pay out a dividend. So having that cushion of 65%, because they only pay 35% out as a dividend, I like that because they have a cushion where they can still raise the dividend and not be in any financial problems. And also a fun way of looking at it is whenever you own Nike shares, if you see somebody walking around outside in Air Jordan shoes or even Nike clothing, a portion of that sale is going to come to you as a dividend. The second company on the list is ABBVIE. Now, ABBVIE is in the healthcare sector. It's a biopharmaceuticals company. In layman's terms, they create medicine to try to get rid of illness. It's a $255 billion company, and this was actually a spin-off because in 2013, they spun off Abbott Laboratories. From a dividend perspective, this company has paid a increasing dividend since 2013, and they've been able to grow their dividend by 20% on average year over year since 2013. From a payout ratio standpoint, their payout ratio is higher than what we saw with Nike. Their payout ratio is at 74, but they've been able to consistently generate revenue, and they've been able to grow their revenue between 11 to 15%, which also means that they've been able to grow their dividend also. Number 3 on the list is Microsoft. Now, the funny thing about Microsoft is that people don't focus on Microsoft compared to other companies. Companies that you always hear about are going to be your Teslas, Google, Facebook, even Apple. But Microsoft is a $1.6 trillion company. One thing that's interesting about Microsoft also is that they have their hands in so many different business ventures. Not something that I necessarily like, but it works for Microsoft. Of course, Windows, GitHub, Xbox, Azure, which is the competitor of AWS, which is the technology infrastructure. Microsoft is doing extremely well. And from a dividend perspective, this company has paid a continuous dividend since 2003. They've been able to grow their dividend on average by 11% year over year. And their payout ratio is at 25%. So everything is pretty much looking in the up and up for Microsoft. Number 4 on the list is PepsiCo. The Pepsi company, being a $244 billion company, the thing that I like about this company is that it's extremely easy to explain what this company does, even to a little kid. Because Pepsi, of course, they produce beverage drinks. But that's not the only thing that Pepsi does, because a lot of people don't know, but Pepsi owns a slew of brands. Brands such as Gatorade, Lay's potato chips, Doritos, Quaker Oats, and the list goes on. From a dividend perspective, PepsiCo has paid a continuous dividend since 1973. That's almost coming up on 50 years. And not only have they been able to pay a continuous dividend since 1973, they've also been able to grow their dividend, if I look at the last 5 to 10 years, by around 6%. If I look at their payout ratio is a little bit higher at 64%, but with the track record of Pepsi company paying out an increasing dividend, they've been through so many economic bumps. Think about the Great Recession. the Y2K crash. Even through all those dips in the stock market, the Pepsi company has been able to still pay a dividend and increase their dividend above the average inflation rate. That's why I like the Pepsi company, and I have them on my watch list, but I also bought stock in the company. And for number 5, I wanted to throw in a different company, a company outside of the US, because all of the number 1 through 4 are going to be US companies. This one is actually outside of the US. It sells famous products also. This is the Unilever company. Now, the Unilever company is actually a British consumer goods company. So the UK owns this company. Some of the brands that they own, you've heard of them, but you never thought they were owned by Unilever. These brands are going to be Ben & Jerry's, Dove, Hellmann's. Think about the mayo. From a investing standpoint, the interesting thing about companies that are outside of the US is that from a dividend perspective, they pay an increasing dividend, but you have to look at the trend line because you will see the dividend income go up and down, but you have to look at the trend. You'll see the trend be a upwards trend. Unilever has paid a consistent dividend since 2008, and they've been able to grow their dividend by around 6%. Their payout ratio, they keep it at around 64%. So all in all, Unilever is one that you need to have on your watch list and buy when it's trading at a discount.